Hi there. So welcome to today's broadcast on the Business Lecturer in Within show. Thank you very much for joining the broadcast every single weekday from Monday to Friday. I go live on YouTube like this, 4 p.m. to teach live and also ask questions in relation, answer questions that students may be having in relation to what they are studying for their ICAG examination from May 2020 and beyond. Like always, my objective for this session is to be able to provide assistance that you need, assistance that you require in order for you to prepare well for your examination, because at the end of the day, it's important for you to not only register for the exams, but ultimately pass the exam. That is why during this, we've designed this session so that I come on live every single weekday, Monday to Friday, and teach here on YouTube and answer your questions as well. So what I want you to do is to share the channel with your colleagues, share it on Facebook, share it on WhatsApp, tell your colleagues at the workplace, in your schools, everywhere about it. And also make sure that most importantly you comment. If you just joined the broadcast, welcome to today's broadcast. Comment below with your questions, topics that you want us to cover on this channel, because remember, like I always mention since we started this journey, I'm not going to just be teaching what I feel you must know, but I'm going to be teaching based on the questions that you ask me so that I can provide the maximum value for you at the end of the day. So whatever you want me to see, you want to see more here, you want to see me cover up, maybe there are questions that you have that you want me to answer or solve for you, all you have to do is put it in the comment box, whether you are watching the live broadcast or you are watching the playback. Just put it in the comment box. I read all your comments and I'll reply to all your comments in relation to that. Now, also when it comes to the preparation for the ICAG May 2020, for those of you who are not attending lectures, you've got to make sure you get some teaching center and attend the lectures, because like I always say, it is better to be with a community, with an environment, attend lectures, than doing it all by yourself. So make sure you attend a lecture closer to you or something like that. But if you are located at somewhere that it will be difficult for you to attend lectures, or you will not have access to any quality partner in learning, then you can join us and study under my mentorship online at the Nhyira Premium University.com/courses. The link is in the description box. You can check it out and enroll in the course today. When you enroll in the course, that gives you access to study material. So you get the lecture videos, you get our ebooks, you get my book that on the course, you get question kits, but most importantly, you get a weekly one-on-one session with me via Skype, where I answer any question that you are having towards your preparation for the exam. So that is what I would recommend. Attend lectures, look for lectures somewhere and attend lectures, and that will help you to prepare well for your examination. Right, so if you are just joining the broadcast, once again, welcome to the broadcast. If you are watching the playback also, welcome and thank you for joining me today. Comment below with your questions, share the channel on Facebook, share it on WhatsApp, and tell a lot of people about this, because I'm doing this to help as much people as possible. There are many of you that I cannot come and teach you personally, but on this platform we can reach hundreds of thousands of people so that we can assist them and we can together make the world a better place. So comment below if you just joined the broadcast, any questions that you have for me to cover in relation to that. Now, the ICAG has released the examiner's report on the November 2019 examination. So for those of you who were waiting for the questions to be available on the ICAG website, now it is available from today. You can go to the ICAG website, scroll down to the bottom, you will see past questions and answers. You click on that, then you can download the question. From next week, I'll be going over the examiner's report and the various things that the examiner has mentioned in financial reporting, strategic case study, audit and assurance, management accounting, public sector accounting and finance, taxation, principles of tax, advanced taxation, and all of the other subjects where I'll be going through the chief examiner's reports and the various recommendations that the chief examiner makes, because the performance was, as always, not good, but there are a lot of queries, a lot of reasons, possible problems that the examiner shared and discussed, and it is very important for you to read the chief examiner's report for the November 2019 so that it guides you in relation to how you prepare for the examination, the attitude that you have to adopt for the examination, the approach that you have to use for the examination, so you increase your chances of passing the exam. So from next week, that is Monday, I'm going to be going through the chief examiner's report, briefly talk to you about it, give you some guidelines on how you can study, how you can position yourself in various subjects, so that when you sit for the exams, you ultimately pass the exam in relation to that. So comment below with your questions, anything that you want us to cover on this channel, you comment below. I'm going to be reading all your questions, whether you are watching live, as you are live now, or you are watching the playback. Just comment below with all your questions, and we are going to be going through that. Ebenezer Atta, welcome. I'm present, yes? So welcome. Good to see you. Yeah, good to hear from you as well, Ebenezer Atta. Thank you for joining the broadcast today. So share the video on social media, Facebook, share it there in the groups in Facebook that you belong, share it there on your WhatsApp platforms, ICA platform, share them there, tell people about it so that they can discover this channel, because we have a lot on this channel that we can assist a lot of people, because like I always say, you don't know the problem that someone has in a subject or in a topic. Sharing my channel with them and they discovering the channel and finding the content will help them to become successful and release them from the stress that they are going through preparing for their examination. That is my objective, that is my goal here, and that is why my team and I, we put together this channel to be able to provide you with nothing but the best so that you can prepare well for your examination. So what am I going to be doing today? Today I want to go over, still on the overview of the syllabus, and I want to go over financial management today, and also another subject in relation to that. But as I'll be going over financial management, there are a lot of things, there are some things in financial management which are in management accounting. Very, very critical that you must understand about, and there are other things in financial management which are in other topics as well that I'm going to be looking at and talking about in relation to that. Papa Opoku Yang, good day. Thank you for the good work you are doing. I wish we would discuss procurement and budgeting in PSA. All right, so Papa Opoku, that is a topic you just listed. And I'm going to be adding it to my bucket of list that we have gathered so far. I could discuss that. So let me put it down. Procurement and budgeting. So public procurement. And then budgeting in public sector. Okay, that's awesome. I've added it to my topics here that we've gathered so far. Now, Papa Opoku, since you are writing public sector accounting and finance, make sure you get the Public Financial Management Act 2016, Act 921. Make sure you get that act, download it, just Google it, you can download it. If you already have it, too, good. But if you don't have it, download it. The Public Financial Management Act 2016, Act 921. That act is critical, has a lot of things that will help you in order to prepare for your public sector examination. So that is also something that I'm adding there. Definitely I will cover what you have mentioned, procurement and budgeting in public sector. Like I mentioned, this broadcast is based on the various queries that you are going to have, the various questions that you ask me, the various topics that you suggest to me. So if you are watching, just comment below with the topics, with the questions, and I'm going to be covering them during these days. We are doing this from now till you write your exams. From now till you write your exams. So there are a lot of things that we are going to be covering every weekday, Monday to Friday at 4 p.m. from now till you write the exam. So a lot of things will be covered. So just comment below with the topics, comment below with the questions, comment below with the issues that you want me to cover, so that I can prepare ahead of time and also be able to provide you nothing but the best, so you prepare well for your examination. So I'm discussing today the overview of financial management, and like I mentioned, I'll be talking about other subjects as well as we continue with the discussion today. Now, the new financial management in level 2 is now packed. Now, why did I use the word packed? Because under the new syllabus, because advanced financial management is no more in the ICAG professional qualification syllabus, some of the topics in the advanced financial management have been brought into the financial management in level 2. So in case you are still using a material from the old syllabus, or you are using books from the old syllabus or notes from the old syllabus, you may be falling short, because there are some new additions that are critical for the examination in relation to that. So briefly, I want to go through the structure of the syllabus. There are 2, 4, 6, 7 sessions of the financial management syllabus. The first thing is the environment for financial management. So environment for financial management. This is 10% of the syllabus. Now, what does environment of financial management cover? Among other things, you will be covering here basically theory. So you will look at the overview of the financial management. You will look at the financial management decisions, which is something I'll be going through in a moment. Then you will look at the impact of the economic environment on businesses. You will also discuss the role and impact of regulatory bodies on businesses. The role and impact of regulatory bodies on businesses, like the Bank of Ghana's role, the Securities and Exchange Commission, the National Pension Regulatory Authority, the National Insurance Commission. All these are regulatory bodies, and their role affects businesses in various ways. For 10% of the syllabus, there is a theory question that will be waiting for you in relation to that. Then you will look at the issue about stakeholders and their objectives. Very, very important about the syllabus. Now, who are stakeholders? Stakeholders can be defined as people or individuals who are individuals or entities who are interested in the operations of an organization and are affected directly or indirectly by the operations of what? The organization. That is what we mean by stakeholders. So as part of this 10% syllabus grading, you are supposed to look at what? Stakeholders. And you are going to have internal stakeholders, external stakeholders, connected stakeholders. There are various ways that it can be classified, but generally we have internal and then the external stakeholders. For instance, we can talk about the employees of an organization, the management or board of directors, the shareholders of the company, customers, bankers or suppliers. Then also the issue in relation to government and government agencies. All of these guys are stakeholders of the organization. You must understand their objectives. The reason why you must understand this is that the role of the financial manager or the CFO of an organization, as we will call it now, the CFO of an organization, is conflicting, because shareholders are the owners of the company. They contributed to the capital of the organization. And their objective is that they want to see the organization making profit, and for them to what? Make some dividend and decide whether to continue with their investment, dispose of their investment, or increase their investment. So if we are going to do something, that means our responsibility as an organization is to the shareholders. Make sure that we use the money very well and provide them with the profit that they need. However, an organization doesn't live in isolation. It lives in an environment. So in the environment, there are people. We must undertake corporate social responsibilities. We must provide quality products to the customers. We must provide after-sales services to the customers. We must provide good, better working conditions for our employees. Now, as you are doing all of these, you may be taking shareholders' fund to do that. So meaning that, do you think only about the shareholders, or you must think about all the stakeholders? This is where there is going to be what is called the conflict of interest. But as always, the CFO of the organization must be able to make sure that we are satisfying the shareholders. However, we are also taking care of other stakeholders, because if employees are not happy, they cannot work well in the organization, and certainly we cannot make money for the shareholders. If we are not environmentally responsible and we are not undertaking any corporate social responsibilities, then that will affect us also as a company going forward. But when you are doing all of these, you are using shareholders' money to do it. So as part of the 10%, you are supposed to understand the issue about the stakeholders and their objectives in an organization. This is critical and fundamental to your syllabus. Then the agency problem and its management. Now, you know that the organization, the shareholders are on one side, all right? Then management or board of directors are on the other side. The shareholders are the one who provide management with the resources that they need. That is, they contributed to the capital of the business. In return, at the end of the day, board of directors or management must be accountable for the stewardship of the capital entrusted in their hands. Now, what it then means is that every decision that management makes must be in the best interest of the shareholders. Every decision that management makes must be in the best interest of the shareholders. But the question is, management, do they make all the decisions that they make? Are all the decisions in the best interest of the shareholders? No. No, because sometimes management will launch a product, management will acquire a company, management may undertake a corporate social responsibility, not really because they want to benefit the shareholders, but it is egotistical. They want to have their own interest. Management may design for approval some salary packages that will benefit them a lot at the expense of the shareholders. So there is going to be agency problem. So the question is, if management can make decisions that are not in the best interest of the shareholders, then what do we do? So we identify the problem, some of the causes of the problem, then we look at how we can manage it. These are all part of the 10% of your syllabus for financial management, and that is very, very critical. So what are some of the ways that we can manage the agency problem? One of the ways is to give share options to the management. Share options. So if they have share option, that is, if the company gets to a certain limit, they have an option to buy a certain number of shares, then they know that they are also part owners of the company. So even though they may still be messing us up, they know they will also be affected, because they are not just employees, but they are what? Potential shareholders or even shareholders of the company. That is share option. Another thing also is about providing them with what? Some favorable bonus or incentive packages that will motivate them so they don't engage in anything that will affect the interest of the shareholders. That is also one way we manage. Then another way of the management is the auditing of financial statements, which is traditionally there. So after they prepare the financial statements are given or are audited by an independent auditor, and an audit report is what? Issued. So if you are a manager and you know that auditors will come and audit you, and if something is smelling, you may be in trouble, then you will be able to make decisions that protects the best interest of the shareholders. So these are some of the issues that you need to understand. Then the last thing there, still at the 10% segment, is corporate governance and social responsibility. Corporate governance and social responsibility. Very, very important. Many organizations are collapsing and not doing well because of the poor corporate governance structure that they have in place. Some organizations don't even have any governance structure. To have a governance structure, the management must be there, audit committee must be there, internal auditors must be there. All of these guys will do various things in order to drive the organization. In order to enhance good corporate governance, the CEO of the company must not be the same as the board chairman of the company. Otherwise, a single person will be dominating in all of the meetings. To enhance good corporate governance, a single member must not be seen on various committees of the subcommittees of the board. So he is on the risk management committee, he is in the audit committee, he is in the remuneration committee, he is in the nomination committee. If that same individual is in all the committees, then that individual will dominate every board decisions that is being made, and that could affect what? The way an organization is directed and controlled, which is the meaning of corporate governance. So these are the things that you must understand in the 10% segment of the environment for financial management. Quite a lot, okay? But it's quite voluminous there, but it's theoretical, and you've got to read them and understand them in relation to that. So that is the syllabus. Then we come to the second aspect, which is the financing decisions. Financing decisions. This is a huge aspect of the syllabus. Whether you like it or not, there is a question waiting for you from here. Financing decision. This is where you talk about sources of finance, okay, cost of capital calculation, and then dividend decisions, okay, or dividend policies. Sources of finance, where do we get the money from? Cost of capital, what is the cost of that money? So under cost of capital, we will do cost of equity, we will do cost of debt, and then we will do the hybrid, that is the weighted average cost of capital. If we are taking the funds both from debt and also from equity, how do we go about it in relation to that? That is also something you must understand about the financing decision. So basically, under the financing decision, we are looking at sources of finance, we're looking at cost of capital, and we're looking at what? Dividend decisions. Remember, if you are dealing with cost of capital and equity, the concept of capital assets pricing module is fundamental in financial management, and you must know that because the examiner may go there and ask a question about that. So certainly, this is a huge area of the syllabus. Per the syllabus grading, that is 15%. Whether you like it or not, there is a question on calculation of cost of capital waiting for you in the exam or under financial management. It is critical and it is fundamental to the syllabus. Then we come to the third thing, which is time value of money. Time value of money. Now, this was actually in quantitative tools under the old syllabus. So since the quantity is no more, that paper too, that some of the topics were picked and spread in other subjects in the professional qualification syllabus. So you're going to be looking at time value of money. Now, this is where you talk about issues like simple interest, compound interest, sinking fund, okay, annuity, the discounted value. So all of these things will come under time value of money, and amazingly, that's also 10% of your syllabus. That is also 10% of your syllabus. It's very critical, very important. Then number 4, another crock topic of the syllabus is investment appraisal techniques. investment appraisal techniques. Now, for those of you who are writing management accounting, investment appraisal, it's there, all right? It's part of it. If you are doing strategic case study in level 3, investment appraisal, it is something you must know because it's part of what you must understand for the subject. Now, at this level, what are some of the things? Per syllabus grading, that is also 15% of the syllabus. So you have to understand the investment appraisal techniques, that is the NPV, the AIR, that is the accounting rate of return, internal rate of return, the payback period. You must understand these 4 things there. Then also you must look at how to appraise investment projects when there is tax, when there is inflation and all that, dealing with capital allowance, very critical. You must look at it. Now, for those of you who are doing subjects that have investment appraisal in them, you can check my channel on financial management, I think so. We have the full video, the complete video on investment appraisal already on the channel. It's already on the channel, so you can check it out and watch it later on. All the video, that is from the introduction on investment appraisal, all the methods, I went through them. Then one key thing here is, that is also here, is the Modigliani and Miller concept. And that is actually in financing decision, that escaped me. Modigliani and Miller. You know, Modigliani and Miller says that because interest is tax deductible, a company can be geared up to 100% and nothing will happen to the company. So we have the Modigliani with tax, Modigliani approach without tax. All of that are now here in the syllabus. They were actually part of critically advanced financial management, but they are now here, well, that you must understand. In addition to the methods that I mentioned for investment appraisal, specific investment decisions also here. So issues like lease or buy, it's here waiting for you. Issues like asset replacement, it's here waiting for you. Then issues in relation to sensitivity analysis, it's also here waiting for you. So for 15% per the syllabus grading, these are the things that you have to understand under the investment appraisal. Then we come to one of my favorites, my personal favorite topics of the syllabus, and that is financial risk management. The financial risk management. So this is where, that's also 15% of the syllabus. This is where you are going to be talking about issues such as forex exchange risks, how do you manage all those risks. We have the internal approach, the external approach. So issues like invoicing in home country currency, matching revenue and expenditure, and then leading and lagging. These are all internal approaches, okay, of managing forex exchange. So if we, because of globalization, we have customers outside who buy from us, or we buy also from some supply outside from, say, China. How do we deal with the foreign exchange with the Ghana cedi, the way it is misbehaving? And now a committee has been set up to look into the issue about why the Ghana cedi continue to depreciate. What it means then is that as a corporate organization, one of the key role of the CFO is to find out how an entity can hedge itself against the negative movement in what? The exchange rate. Otherwise, you buy the goods and then you are going to be paying more than what you are supposed to pay, or you even borrow money and you are going to be paying far more than maybe 2 or 3 times the money in relation to that, just because of what? Exchange rates. So one of the core roles of the CFO is to find out how can the entity hedge itself against forex exchange rates. Not only that, the entity must also find out how it can hedge itself against interest rates. Okay, interest rates. So if we want to undertake a project 2 years from now, how do we hedge ourselves against increments in the interest rate? Because the interest rate always goes up depending on the financial institution that you are dealing with, and depending on what kind of policies that is being rolled out by the central government in relation to the central bank rather in relation to that. So we have to find out how we can hedge ourselves against forex exchange risks and then what? The interest rate risks. That is very critical of the syllabus. That is very critical of the syllabus, and I'm gonna be, if you request for it on this topic, foreign exchange risks, I will teach it, but if we don't get much request about it, then we assume that our viewers understand this particular topic. It's critical, quite technical, and many students struggle with it, but it's very simple to understand in relation to that. So for instance, how do we deal with the issue about foreign exchange rates? Like I mentioned earlier, there are what we call internal approach or methods and then external methods. So we can do leading and lagging. Leading means you pay the money in advance even before you receive the goods, so that you solve the issue about the exchange rate. Lagging means you expect that there will be a positive movement in the exchange rate at your that will be favorable for you, so you delay to make the payment in the future. So that is the concept about leading and lagging as a method to control forex exchange rate. Another thing has to do with the matching. Okay, matching is where you find out that okay, we buy from China or we buy from outside and we also sell our goods outside. So there is a revenue in dollar coming and there is an expenditure in dollar we have to pay. So all we will do is that the revenue we are having in dollar and the expenditure we need to pay in dollar, we just use the dollar to pay its equivalent. So when that happens, we reduce what? The forex exchange rate. That is one way, internal control, that we can deal with the forex exchange risk. Then the third internal way is the issue about invoicing in home country currency. So if normally Ghana where we are, it's hard for companies to actually implement that, because sometimes if the Ghana cedi is depreciating and you are taking the dollar, meaning that you will get more money. But if the Ghana cedi is appreciating and you are taking the dollar, meaning you get what? Less money in relation to that. So the invoicing, but that is also one method that can be used by companies in order for them to
This is the Millionaire Booklet, How to Get Super Rich. My name is Grant Cardone. I'm the
in relation to that. Then we come to the external approach. Now with the internal methods, the company doesn't involve any other entity. The company doesn't involve any other people, so it is internal. But with the external,
This is the Millionaire Booklet, How to Get Super Rich. My name is Grant Cardone. I'm the author.
The company makes arrangements with, say, third parties. So, for instance, the issue in relation to forward exchange rate arrangement, swap, currency swap. In relation to that, that is also another method. Money market hedge is also another method. So all of these are ways through which an organization can deal with what? The financial risk management and all other things being involved. There is a question waiting for you in the exam or about this. So as the CFO of the company, you must understand and know how to deal with this issue. Then you come to number 6, and that is WCM. WCM means working capital management. Another fundamental aspect of the syllabus, that's also 15% of the syllabus. So working capital is core to the organization. If you are doing strategic case study, this is a topic you don't want to miss, because it is part of the financial issues that you must understand when we are
This is the Millionaire Booklet, How to Get Super.
When we are dealing with strategic case study. So in strategic case study, you must understand the investment appraisal, you must understand forex exchange risk, you must understand the issue about working capital. How can an entity manage its inventories? How can an entity manage debtors, trade receivables? How can an entity manage trade payables? How can an entity manage its cash? All of these things are under working capital management. Then we need to also identify the various approaches that organizations use in managing working capital. So we have the aggressive approach, the conservative approach, and then another type of approach that is a bit off for me now, but if I remember, I'll tell you about it. With the aggressive approach, it is where the entity doesn't allow customers a long time to pay for their purchases. So customers are required to pay how much they owe as soon as possible, very short time, but the company pays its payables a long time. That is the issue about that. But the regressive approach, the organization allows the company or customers more time to pay, but they pay their suppliers very soon so that they will be able to get the inventories to stimulate the demand for the organization. So these are also some of the things that you'll be dealing with in working capital management. Then to the last aspect, that is business valuation, mergers and acquisition. Business valuation, mergers and acquisition. Now, mergers and acquisitions was actually a topic in advanced financial management typically, but now it's here as well. So in addition to looking at how we can place a value of the company on the company, the issue about mergers and acquisition is also critical here. So this is 20% of the syllabus. So it's something that you cannot take for granted. If you are doing strategic case study also, this topic is something that is critical there as part of the financial perspective if you are doing strategic case study in the level 3, the final paper you are supposed to write. So with business valuation, this is where you are using various methods in order to place a value on what? The organization. Okay, so we have the asset valuation module, the dividend valuation module, the price earnings ratio. We can use that as well. We have the earnings yield approach. So all these methods are ways that we can place a value on an organization and calculate the value per share in relation to that. So these are broadly what you must understand when we talk about financial management. When we talk about financial management, so this is the scope of the new ICA syllabus, financial management. If you are watching this, comment below with your questions. So this is the overview of the syllabus. Comment below with any questions on what you think about the overview. Now, in addition to the overview, let me summarize the entire syllabus as well in relation to something that is critical. Now, when we talk about the financial management, it is the role of the CFO, that is the Chief Finance Officer, to help the entity or the organization to make, among other things, 4 major decisions. 4 major decisions that the CFO must help the organization to make. 4 major decisions. So, CFO helps the entity in making 4 major decisions. The first one is called the investment decisions. Now, the investment decisions try to answer the question, what do we need to put in our money? What assets must we buy? What businesses must we acquire? So all of those, so acquisition and merger as a topic is part of what? Investment decisions. So if you are acquiring a company, that is an investment you are making. You are buying a plant for the organization. That is an investment decision. We are buying a delivery van for the organization. That is an investment decision. We are launching a new product. That is an investment decision. We are undertaking a research and development, that is also what? An investment decision. So the CFO must make sure that whatever investment decision the organization is undertaking is actually maximizing the returns of the shareholders. This is very critical, this is very important for the organization. So under the investment decision, this is why we need to use the various investment appraisal techniques I spoke about. The net present value, the internal rate of return, the accounting rate of return, the payback period. When there is inflation, when there is tax and all of those things, it's part of what? Investment decisions. These, the CFO assists the organization and the board to be able to what? Reach a very conclusive and understandable ground. Then the issue about business valuation, it's an investment decision. So if company A wants to buy company B, that means company A must value company B, so that how much company B is saying they are selling their company, they can validate that through what? The valuation. So that is part of your investment decision. So business valuation is part of the investment decision, and this is very critical for the CFO in relation to that. Now, how can an entity undertake investment decision if it does not have the money? So the second core decision that a CFO enables the organization to take is the financing decision. Now, among other things, the financing decision is divided into two. The financing decision tries to answer two questions. Where do we get the money from? Okay? And then, what is the cost of the money? Two questions the financing decision tries to ask and answer. Where do we get the money from, and what is the cost of that money? So if we want to acquire an asset, that is an investment decision. Okay, we have appraised the project, it is having a positive NPV, it will increase the wealth of the shareholders, it's good, we need to undertake it. But quickly, we need to come to financing. How do we buy that vehicle, and when we are going for the money, what is the cost of that money? So under financing decision, the where is about sources of finance. And then the what is about cost of capital. How we are getting the concept. So the where is about sources of finance, the what is about cost of capital. This is very critical, this is very fundamental. So we want to undertake, we want to buy a business. That is an investment decision. Where do we get money from? How do we finance that acquisition? We must ask ourselves where we get the money from, sources of finance. Now, sources of finance is also divided into two broad areas. We have the short-term sources of finance, and then what? The long-term sources of finance. Then we also have what is called the Islamic finance. All these are in your syllabus and you must understand it. Islamic finance, very, very critical thing that is developing. Per your syllabus, you are supposed to understand what it means, the various instruments under Islamic finance, its benefits as well as the limitations on Islamic finance. It is in your syllabus and that is critical for you to understand. So what are the short-term sources of finance? Among other things, in the short term, there are bank overdraft, short-term bank loan, trade credit or trade payables. All these are short-term sources of what? Finance for an organization. So in the short term, if we want money, then we can raise it from what? The short term. But really, we are not much excited about just the short term, but also about what? The long term. So in the long term, entities have two choices that they can raise money from. They can raise the money from the equity shareholders, or they can go to debt holders or go and borrow the money. So when you are talking about sources of finance, one of the things that stands out is the issue in relation to the pecking order theory. The pecking order theory. where when an entity is looking for money, first it goes into it covers retained earnings and find out, do we have enough money in our retained earnings to be able to undertake the project? If yes, then maybe we use that to undertake the project. If no, we come to the second level, and that is debt finance before we go to equity. The main question is, why is debt prioritized over equity? Why is debt prioritized over equity? It is simple, because debt is what? Tax deductible. One of the reasons why debt is prioritized over equity is because debt is tax deductible. But dividends paid to shareholders or returns given to shareholders are not what? Tax deductible in the profit statement of an organization. So in the long term, we can go for equity shares, or we can go for what? Debt finance. Now, under equity also, it depends on whether the entity is listed or it is not listed. If the entity is listed, it will do its IPO, it could do the placing, all of these things, or public offer, it will be there for them as equity finance. But if the company is not listed, the company can decide to become listed, and also if it doesn't want to be listed, then it can raise the money from what? Private investment organizations or individuals. Then it comes to the debt finance. Under debt finance, there are various forms of debt that we can talk about in relation to that as well, that you must understand. That you must understand. So when you talk about where do we get the money from, sources of finance, these are the things there that you must understand. Then we come to the what. Like I mentioned earlier, the what means what? The cost of capital. Okay? So what is the cost of capital for the money that we are going for? So if we are going to say shareholders to go and take the money, what is the cost of capital? So here we will be doing cost of equity, that is KE. We will be doing cost of debt, that is KD. Now, under cost of equity, there are two ways that cost of equity will be computed. We have the dividend valuation module, where you use either the constant dividend approach or the constant growth in dividend to be able to calculate what? The cost of equity. Or you can use the capital asset pricing module. One of the limitations of the dividend module as a basis for calculating the cost of equity is that the one of the bases for using the capital asset pricing module as a basis to calculate the cost of equity is that the dividend valuation module does not consider the risks. Okay, so it has a couple of limitations there. However, the capital asset pricing module takes into consideration what? The risk that is involved in the asset, that is the equity beta. The equity beta. So here, when you are dealing with the capital asset pricing module, you should be able to understand how the various treatments are done in relation to moving from the asset beta and the equity beta. The equity beta is the risk involved in the shares. The asset beta is the risk involved for what? The company, or the company as a whole, or the industry as a whole. So the question can be in such a way that a business is diversifying. So if the business is diversifying and it's an investment appraisal decision, you must calculate the capital asset pricing module, which will be used as the discounting rate to discount the cash flows. So if a business like a school is entering into another industry, like maybe computer sciences or software development, that is diversification. The way they can evaluate that project is to calculate the asset beta for that industry, or look for a company and use their asset beta. Then
this is the millionaire booklet, how to get super rich. My name.
you'll be able to use that to regear the equity beta of the company and then use the new calculated one for this. Now this is more theoretical, but you have to, the calculation aspect is there. I think there are some videos on my channel, I don't know, but if people request for me to take you through these topics or these concepts, I will be glad to do that as well on the live broadcast. So that is calculating the cost of equity. We can use the dividend valuation module or we can use the asset pricing module. Then we come to the KD, that is cost of debt. It's very, very important here, you must understand. When it comes to cost of debt, there are two things you must understand. Is the debt a redeemable debt? So let me start here. Is the debt an irredeemable debt? Or it's a redeemable debt? So that's a question you need to ask yourself. Is the debt a redeemable debt or an irredeemable debt? Because the way you calculate the KD, okay, the way you calculate the cost of debt is based on whether the debt is redeemable or irredeemable. So in the question, you don't just read and begin to calculate. You must understand whether the debt is redeemable or irredeemable. Why is that? Because if the debt is irredeemable, then in a simple language, KD is equal to I over PO. That is the interest over the market value of the bond. That is the market value per $100 or 100 Ghana cedis bond. That is without tax. But if it is with tax, then KD will be I over PO 1 minus T. KD over 1 minus PO KD equals I over PO 1 minus T. So the T represents what? Tax. Because we say interest is tax deductible. So if the debt is irredeemable, then this is the formula you use to calculate the cost of debt. However, if the debt is redeemable, then the cost of debt will be equal to the internal rate of return. If the debt is redeemable, then the cost of debt will become what? The internal rate of return. And there is a concept on how you use the internal rate of return concept to be able to calculate the cost of debt for a redeemable bond or a redeemable loan note of an organization. So that is the second aspect of the CFO's decision making, financing decision. As you can see, this is a broad area, okay, of your syllabus. What I just illustrated here, very, very broad, very exhaustive in your syllabus. So where do we get the money from to finance the investment projects? That is the sources of finance. And then what is the cost of the money? That is the required rate of return on the loan note. So if, for instance, you say you want to open, let's say a provision shop, then you come to me, Nhyira, can you lend me $1,000? I will ask you, how much will you pay me if I lend you the $1,000? If you say, Nhyira, every month I will give you 50 Ghana, then that 50 Ghana becomes what? The cost of the money you are borrowing. That is what we mean by what is the cost of what? The capital in question here. Then the third decision that the CFO helps the board and the organization to make is dividend decision. Dividend decision. Now, dividend decision is closely related to financing decision. Remember when I was explaining the financing decision and I was talking about equity as a long-term source of finance, I mentioned the issue about the pecking order theory. That when organizations are looking for money, they first go into where the retained earnings. So what is the dividend policy of the organization? What approach of dividend are they using as an organization? Because if you pay more dividend, it means you retain less profit. If you retain less profit, that means less money is available for reinvestment. However, when we are designing dividend policy, we must take into consideration a lot of factors. The tax position of the shareholders, the preference of the shareholders in relation to their risks of the shareholder. Some shareholders are quote unquote hungry shareholders. Every year they want some dividend to survive. Some shareholders also are long-term people. They are not interested in dividend, but they want to sell the company 10 years from now, 20 years from now, and make a large sum of money and go away in relation to that. So that is what you have to understand when we talk about the issue about what dividend decision. So if an entity pays a higher dividend, that means that there will be what? Less financing what? Available for the company. But if an entity pays low dividend, that means less money will be retained for investment decisions later on. There are some shareholders, if you don't pay dividend, they won't say anything. They are happy. They will continue and have their shares once the share value rises. But there are some shareholders, if you don't pay dividend, they will sell their shares and go away. And that would affect the value of the company. So dividend decisions is very critical, one of the fundamental issues by the CFO and for the CFO, and you've got to make sure that you understand that in relation to that. I think I had some comments here. Kwejo Ata, great explanation. Thank you, sir. You are welcome, Kwejo. Thank you very much for your compliments. Really appreciate it. So that is the third thing about dividend decision. Very, very important, closely related. So your syllabus require that you understand the issue about dividend decision. What factors we must take into consideration? What approaches can we design for a dividend decision for an organization? You must take that into consideration and you must know about it as well in relation to that. Then the last decision which the CFO helps the business to make is the risk management decision. This is where the financial risk management I spoke to you about later comes to be. So the financial management, risk management decision. So when we talk about risk management here, we are not talking about business losing or whatever. We are talking about financial risk management here. And most importantly, we are focusing on the forex exchange risk management as well as the interest rate risk management. So how can the CFO help the business in order to hedge? Like the Ghana cedis, like I mentioned earlier, the Ghana cedi keeps depreciating, and even the government doesn't understand why the Ghana cedi is depreciating. So they've put together a whole committee to investigate and look into it and make various suggestions to the government so that they can implement some policies so the cedi appreciate. So if you are the CFO of a company and your company deals in international trade, buy some raw materials or goods from China and they have to pay in dollars, that means that they will be taking a lot of Ghana cedis to pay some few dollars. That means there will be pressure on the company. For that reason, the CFO must suggest to the company and must assist the company how it can hedge itself against the negative movements in the interest rate. This is very important. This is very, very critical. And I've already discussed with you some of the internal and external approaches or strategies that businesses can adopt in relation to that. The same thing happens to interest rates. For instance, if the company wants to undertake an investment project, they want to buy a company 2 years from now, or they want to invest in research and development 2 years from now, how do they hedge against increments in what? The exchange rate. So they can do what is called forward rate arrangement, which means they will go to their financial institution or the bank and negotiate with the bank that, hey, bank, in 2024, we will need a loan of $10 million. However, we would like that you give us the loan at an interest rate of, say, whatever, 20%. So in 2024, when it's due, it's a contract we've signed with them. We will go and borrow the money, and they are under obligation to give it to us at that interest rate. Now, what happens is that irrespective of the interest rate at that time, because we have signed a contract with them, they what? Give us the loan at that interest rate. Now, it could be that the interest rate has increased. That one, we have safeguarded ourselves and they are losing. Then also, it could be that the interest rate has fallen. That one, we will still be paying the rates that we have agreed, so we will be losing them. However, All this is based on what? The professional judgment of the CFO with the assistance of management in order for them to make the best decision for the organization. So, in a nutshell, your financial management is based on what? All of these things. These 4 key definitions. So these 4 key definitions or decisions are the 4 pillars upon which we build the subject financial management. Investment decisions, financing decisions, dividend decisions, and risk management decisions. So these are what you have to understand about financial management. Like I mentioned, if you want me to take any of these topics and delve deeper into them and explain them and solve some questions on them, I'll be very grateful to do it for you. So if there are any of these topics that you want to see more, you want me to teach live, you want me to solve questions on, just put it in the comment box and I'm going to be answering that for you in relation to that. So this is what you have to understand about financial management. Now again, if you are not attending lectures, I will advise that you make sure you attend lectures. It's very, very important. Make sure you get a lecture or a tuition center and attend lectures. In case you are located at a place where you cannot attend lectures or your job will not allow you to attend lectures or the distance you cannot go or there is no tuition center located where you are, as far as you have access to the internet like this, you can study with us online under my mentorship. All you do is you visit NhyiraPremiumUniversity.com /courses, then you can enroll in a course, you get access to ebooks, you get access to question kits, you get access to a one-on-one session with me via Skype once a week to assist you in relation to what you are studying so you prepare well for the ICAG May 2020 examination and beyond. So this is where I'm concluding on for today's lesson. Very much excited, grateful that I'm able to come your way today. Tomorrow we are going to continue same time 4 p.m. Remember to subscribe to the channel if you have not subscribed to the channel and share the video with your friends on Facebook groups, your pages, your WhatsApp platforms. Share and tell your colleagues about it that every single day, Monday to Friday at 4 p.m. Nhyira Premium goes live on YouTube and he's teaching live on YouTube. And let's together help a lot of people who are also preparing for the examination. So thank you very much for joining the broadcast today. I appreciate your comments. I appreciate the support that you gave us in relation to that. So Papa Opoku, Ebenezer Atta, Kwejo Atta, and all of you who are going to be watching the playback, thank you for watching the broadcast. I'll see you same time tomorrow as we continue with our discussion. Remember, my objective is to provide you with content that you'll be able to be in a better position to prepare well for your examination. Subscribe to the channel, hit the bell notification so that anytime I go live, you will be the first person to be notified. And remember, leave a comment below on the topics that you want me to cover, and I'll be glad to cover those topics for you to assist you so you can prepare well for your examination. Thank you very much for joining the broadcast today, and I'll see you again tomorrow 4 p.m. as we continue with our journey to May 2020 examination. Thank you and enjoy the rest of your evening.